Hello, it's Jonathan Wellham of Rocklinc Investment Partners, and it's April the 2nd, 2018. And so we continue our series on the new Rocklinc Partners Fund, and also in general for all of our clients, really talking about some of the holdings that we have within your segregated accounts also. But this gives us an opportunity to sort of zero in, if you will, on the Rocklinc Partners Fund. So we're continuing. This would be the number 4 in our series. And so quickly on the slide before you can see that we're going to talk a little bit about the Rocklinc Overview and investment process very, very quickly. And then we're going to jump into the area of focus today, which is technology. Of course, technology is a hot area. Lots of people talking about technology. Even today, as we're making this video on April 2nd, we're seeing a lot of volatility in the technology space, but we think if you pick good technology companies, then the future will be very profitable for wise and prudent investors. So on the next slide there, the investment process, as we've highlighted a number of times, if you just zero in on number 4 and 5, that's what we're really doing with these subsequent videos where we talk about the actual sectors that we're investing in. And then we also remind you, again, in terms of the Rocklinc Fund, this is a complement to our segregated accounts. It's a no-load fund. It's very cost effective. You can see that the management fees are either 0.95% for smaller amounts of investments, 2,500 up to 250,000, and for amounts over 250,000, 75 basis points. So very, very cost effective for a value-added fund that is certainly way off index, where we're adding a lot of value to the stock selection. On the next slide, we again just highlight the sectors of focus. We've already talked about infrastructure. You see that there, financial, and now we're going to talk about technology. Next week, we'll talk about manufacturing. And then on the next slide, you can see the other 4 areas that we are investing in, precious metals, healthcare, agriculture, and water, and we'll get to those areas over the next few weeks. So let's just zip right in here to technology. And the slide in front of you breaks out sort of 4 areas within technology that we are investing most of the money in terms of the businesses that we're investing in. And you can see data and cloud. I mean, there's no question the whole area of storage and the protection of that information is a very, very large area, and we're investing in companies that are involved in data and cloud and takes advantage of the explosive growth in sort of the whole mobile device usage and wireless data consumption and so on. Online search and the whole area of getting around the internet continues to be a very important area and a high growth area. Smart factories, the whole area of automation. Automation is very large, and we're seeing that again, there's opportunities, a number of businesses that are benefiting from the demand for services, apps, media consumption, leveraging brand recognition, and so forth. And we'll talk a little bit about that. And then software. You cannot run anything in the technology sphere without software, and there's a lot of companies that provide very specialized software, very high value added software, and we're looking at a number of those, and we've made some investments in companies that can take advantage of that. So on the next slide, there's just the logos of the current companies that we would suggest are our businesses that we have exposure to in terms of technology. Bookings Holdings, which is the old Priceline. Alphabet, which is Google. Apple, you can see the big apple in the center. Roper Technologies, a software company. And then American Tower. Let me just say a couple of things about each of these businesses, starting off with the next slide, which is Booking Holdings. Booking Holdings, as you can see there, the name was just changed a few weeks ago from Priceline.com. And this is the global leader in online travel bookings and services. Deals in over 220 countries. It is a massive player when it comes to the booking of airline tickets, of dinners, in terms of the services that you can go to a restaurant and book your restaurant in advance. You can also look at the areas of car rentals, home rentals, vacation rentals. It's just a massive business that takes advantage of the whole virtual aspects of a network and provides you all of these services very cost effectively. And so Kayak, you've heard of Kayak, that's part of bookings. We give you some more information here that you can see here, and Priceline, and also other services that you can take advantage of. So this is a global just leader in terms of online services where, again, it's very hard to compete against a company like this because they're so large and so cost effective in terms of the network that they operate on. So that's Booking Holdings. We like this company long term. It just becomes more and more efficient, and people are booking everything online, and this is a very efficient way to go. The next company is Alphabet, or the old Google. They changed the name to Alphabet, the parent company, and as you can see there, the company operates under a number of names, everything from Google to Waymo to Nest, Capital G, Gallico. They're very large in private equity, making investments in technology, and Google commands really 70% of the world's search engine market, and 85% of its revenue is generated in the area of advertising. And so I'm not going to say a lot more about Google. You can read more information on that slide, but they're just a tremendous powerhouse in terms of search, private equity, and other substantial investments that they continue to invest in terms of automation and so on. The next company is Apple. Everybody, I think, knows Apple. In fact, I'm actually filming this video on my iPad, and we have iMacs, and we have iPhones. And Apple has become just a major part of the global economy. And it's as we say here on the slide, a designer, manufacturer, and marketer of consumer electronic devices and software and services. We've listed for you, all of the products that they have, including things like iTunes, the App Store, iBooks, Apple Music, iCloud storage. They're involved in a lot of storage, Apple Pay, the whole payment system. And you just have this massive ecosystem that Apple touches almost every aspect of our lives in terms of technology and its application. And so we think that they have very significant opportunities to continue growing. With the tax changes in the United States that have taken place, they're going to be bringing back over $250 back to America. They're going to be investing heavily in growth. They're also going to have excess cash to buy back stock, increase dividend, and so we see some good opportunities in terms of Apple going forward. The next company is Roper Technologies, and this is a very unique company. It's a software services company, and as we say here, it's really a portfolio manager of specialized industrial companies that require software. So it's really off the radar screen. A lot of companies wouldn't think of Roper, but they are involved in so many companies, from small businesses to manufacturing companies, to other service businesses that require software within their company, within their business. Then Roper would, quite likely be one of the potential providers of software. Once they get embedded in the various companies and industries that they are involved in, they have very high retention rates, very high reoccurring revenue streams because people sign up on a subscription basis, and they get really embedded in the company's business plan, if you will. And very high free cash flow business, high margin business, and we really like it. As we say here on the slide, high reoccurring revenue and free cash flow conversion, and they just continue to be a compounding cash flow machine. And they're not, as I say, they're sort of under the radar screen. They're not necessarily involved with the big, massive companies, but all these small businesses that are scattered throughout large portions of the world in which they provide software services. So we really like this company. It continues to grow very quickly. It's very profitable, continues to expand, and get into more and more high value areas in terms of software. Then the last company, which we'll mention, is just American Tower. Now, we could have put American Tower into infrastructure because it's really an infrastructure and technology company, but this is the world's leading wireless data company for towers. And so all those towers that you see, all the towers that have to move the signals along, towers outside, towers within buildings, all of that wireless data has to be transmitted. And American Tower would be one of the largest companies in the world that has wireless towers that actually do all of that transmission of wireless data. And we just see the amount of data that's going to have to be transmitted over the next 5 and 10 years just continuing to grow at a very, very healthy rate. As more and more of the world gets connected, we see the Internet of Things, we see automation in cars, automation in our homes, our devices. Everything is going to continue to push towards more data, more wireless data. And so you can see there, American Tower has over 150,000 communication towers. Big player in the United States, but it's also expanding internationally with a lot of towers, almost 40,000 towers in India, and a very large presence in Africa also. And so these are 5 companies that we are invested in currently, and many of these companies you're going to see also in your segregated accounts. They are very, very strong companies, well positioned, great cash flows, good long-term opportunities. And to the extent that the market gets a little choppy and volatile, which we are seeing so far this year, it just provides us even more opportunity to buy these companies at better prices. Because in our view, each of these companies over the next 5 and 10 years will continue to grow and be substantially more valuable in 5 and 10 years' time for shareholders that are patient. So, technology. Next week, or approximately next week, we'll see when we get the next video out, we'll be talking about the area of manufacturing. So I hope that's helpful, and you continue to have a wonderful week. Thank you very much. Bye now.